Okay, so I'm going to get started. I guess as people come in, then they can just maybe catch up or just review the live. So I am Shanique. Everybody probably knows me right now. They don't. So I am Shanique and I own S Majors & Co. So this is my first live doing any of the tax tips, and I want to just say that if it's anything that you guys may want to know that I don't maybe cover, please ask below, and then we'll go through those questions once everything is kind of done with the lives, if that's cool. And you can ask and I may be able to answer, kind of stop and answer as we go through things. One of the things I wanted to also mention as well is that if you haven't gone to the website, you can. I'm at www.smajorsco.com. If you are looking for any online booking information, all that stuff is there for you. If there's anything that you may not be able to have accommodations for, anything like that, then just call me and then we'll just go from there. And I actually will, make any type of reservations beyond what I may have available on the site. The other thing I wanted to start off to say is that I actually am not only preparing taxes for my business, but I also participate in the VITA Center. So what the VITA Center is a volunteer income tax assistance program, and they have it at Prince George's County. And they have it, Prince George's Community College, where I actually am a tax reviewer, and it's volunteer always. And the thing about it is that anybody can go if you make less than $55,000. So that's something that I definitely want you guys to know, that if maybe you feel like that you can't afford maybe a tax preparer or anything like that, or you just don't want to pay one, the VITA Centers actually are always good. The only thing is that if you get a tax preparer, the tax preparer actually is a student at the Prince George's Community College, so they're kind of learning. But with the reviewers like myself and any of the other certifiers, they'll actually come in and they'll actually look over the taxes, and if anything's not right, or if the preparer has any questions, and or the taxpayer has any questions, we will definitely cover those at all costs. So that's not really a concern. It's just whether you want, an expert to do it, whether you do it yourself, or whether you actually go into the VITA Center and have someone to do it. They also do drop-offs at the VITA Center. So with the drop-offs at the VITA Center, you actually, of course, you can just make an appointment, go drop your taxes off. I think it's like 7 days or so. They'll tell you to come back in, and then you can actually pick up your taxes. And a tax reviewer, again, somebody who's professional, will actually sit down with you and go over your taxes before you walk out of the center if you decide to do a drop-off. So again, VITA Centers, they only qualify for people who make $55,000 or less. Anybody above that, they either have to do their own taxes or come to a tax professional. That's one thing I wanted to get out of the way. I think I covered that. Let's just see. Okay. So one of the things I kind of wanted to go over, as you guys know, tax season started on January 28th. There has been mention that because of the IRS and other federal government facilities being on furlough, that the refunds may be not as fast as they normally be. So that is something that I think that may need to be kept in mind for some people. So I just want to let you guys know that as well, going forward. The other thing I wanted to also mention too is I know that they should be fully staffed. It's from what I understand, the IRS. So if there's any questions you may have, you can call them. Again, I'm open to any questions that you guys have. Whether it's an IRS question, if I can't answer it, I'll definitely refer you to the right person so that they can answer it, okay? So one of the first things I want to go over is when you do your taxes yourself, this year is totally different than past years. Okay, so with that being totally different than past years, the 1040 is short this time. It's only like almost like the size of a cardboard. You may not realize that it's the size of a cardboard simply because the cardboard actually, because the form actually is online, so you're not going to see how small it is. All of the information that initially is put on the 1040 is not going to be put on the 1040 at this point. It's only put on the schedules, and it's like 6 different schedules, depends on what you put on to your tax returns. I did put that onto my Instagram, and I think it did go over to Facebook for all the 6 schedules that are actually on the 2018 tax returns. So you guys can look at that when you actually get off of line with me, or if you have any questions as well. The other thing I wanted to also mention is that, so we're going to go over the, first starting with the itemized deductions for state and local taxes. So the itemized deductions are capped at $10,000. They were never capped before, but now they are capped at $10,000. So that means that that'll include your income taxes, your real estate taxes, your personal property taxes, your sales tax, and your foreign income tax. So that means, for instance, as an example, if you wind up having, I would say like your mortgage statement deductions, that could be maybe like $2,000, right? Then you wind up having to add on another one, which may be like your income from your federal tax return, your federal withdrawals, from your check. That could be like, say for instance, another $5,000. Well, you're maxed out on your itemized deductions at this point at actually $10,000. Okay, so the thing about it is that they kind of, it's a benefit in a way because exemptions, the standard exemptions have gone up. So where it used to be, for instance, I think married filing jointly, I think it was $12,060 or something like that. It's now $24,000. So it kind of, in a way, kind of goes actually, beneficial for that. So here's the thing. I do have it here. So the standard deductions last year for like single, married filing single, which I never ever recommend people to do married filing single. If you guys can actually, come to an agreement where you guys can actually file your taxes together, I always tell people to do that. And the reason why is because married filing single really hurts both of you guys on the separate ends because everything is taxed very high. So for the standard deduction, it used to be $63.50. And at the moment, it's gone up to $12,000. And with head of household, it used to be $93.50, and it's gone up to $18,000. And with the married filing joint, or if you're a qualified widow, it used to be $12,700, and now it's $24,000. And these actually go all the way until December 31st, 2025. So standard deduction actually will help. Here's the thing: if you don't have any itemized deductions, right? And you actually have to take the standard deduction. If you have, if your income is at a rate of, say for instance, you made $12,000 and you're taking a standard deduction, well, that kind of brings you down to a zero. So which means you wouldn't be really getting a refund back unless you have other things along in your tax return. Okay. The other thing I wanted to also talk about as well is, let me just go to this. If you guys get your taxes done by a tax preparer, make sure that the tax preparer is someone who can actually vouch for you if you get audited. That's a major concern. A lot of people are like, oh, I can get you a return back for like, X amount of dollars. Yeah, and they may not charge that much, which is fine. But if whatever they put on your taxes, make sure you look at them. And on top of that, also make sure that you literally are going line by line and making sure it's something that you know is accountable for on your taxes, because you don't want to be in a situation where you're literally not, you don't have any type of record or anything like that because of what they put on your taxes if IRS comes to do audits. So that's one thing I want to say about doing your taxes with that. Is there any questions for me at the moment? I'm kind of looking back and forth. So, Lawrence, I don't know how much you're going to get back, okay? I'm responding to Instagram here. Okay. So, some other things that also are concerned this year is that, I'm just flipped through because I made like a little PowerPoint for you guys. Charitable deductions are still on tax returns. The main issue about the charitable deductions being on tax returns, though, is that if they're not going to be more than your deductible, your $10,000 or whatever you may be doing, then it's going to be actually a issue in terms of you even being able to claim it, because you have to actually go 50 to 60% of your adjusted gross income through 2025. I have a question over on Facebook. Do you prepare state taxes from any state? I do, Paula. I prepare from any state. Maryland, DC, whatever. I do. Okay. I did go over the itemized deductions on that. Medical. So, and someone did ask a question about medical deductions. So medical itemized deduction expenses, the adjusted gross floor is kept at 7.5%, right? So here's the thing. So with 7.5%, literally, of your income. So which means that if you don't have enough medical to actually go more than 7.5%, then basically the medical is not even going to be claimed at this point. That's something else too. And after 2018 tax year is going to be 10% of your income. So which means it makes it a little bit more harder for you guys actually to itemize and even include myself if I have any medical bills that are over that. Here's another one. And a lot of people do this because they have expenses for their job. They have union dues. They actually have paid tax preparers. Well, all miscellaneous itemized deductions, and I'm going to go through the list. Unreimbursed employee expenses. So if your employer has told you that you need to take a class and you pay for it and you're expected to have that claimed on your tax returns, that's not going to happen because it's now out of the tax process. Union dues, if you pay union dues, you're just paying union dues at this point. You're not going to be paying anything else but union dues, okay? You're not going to be able to actually deduct union dues. Tax preparation fees, anything that you pay the tax preparer, those are not going to be deductible as well. Safety deposit box fees, any expenses necessary to producing your taxable income, or any expense necessary to pay a tax or collect a tax refund, all of those things are not going to be actually, be able to be itemized on the returns going forward. And I do believe that is up until 2025. These things do apply. Also, people who are claim either head of household or even if you're married with a dependent. The thing is that they wind up changing it. It used to be $4,050, right, for each exemption. So if for 2017, of course, that exemption is $4,050, but now for 2018 is worth $0. So all the dependents that are on your tax return that used to help you lower that liability, it's now taken out. And again, I guess they feel like that the standard deductions was a benefit for that. That's also something that expires 2025 as well. I'm not going to go over the dependency rules, but if you have questions for me, just, again, write them down, or type them below and I will ask them after I've completed this. But there are some dependency rules also. Moving expenses. So moving expenses have been suspended, only except if you're military, of course. Military personnel or military or permanent change of duty, they actually will apply for moving expenses. That's something. If anybody pays alimony, so alimony is something that is not going to be tax deductible anymore. Alimony is definitely not going to be tax deductible anymore. Child tax credit actually has gone up to, it used to be $1,000, now it's going to be $2,000. So anybody who has the opportunity to do child tax credit, they're actually not going to be they're going to actually, have an opportunity to gain $1,000 extra on the child tax credit. Let's go. I'm just kind of flipping through a little bit of more what I had. Okay, so the Obama health care, if you didn't have the Obama health care, you had to wind up actually, having to pay. It was a penalty, right? So that actually added on to what your tax liability kind of was, right? So the thing about it is that now, if you don't have the Obamacare and, you don't have any health insurance, it's not going to be a penalty against you at this point. So that's something also to take into account as well, that the health care is not going to be a penalty if you do not have it. That's something that's new that came in as well. Here is the new tax form. Can you guys see that? I hope so. Can we move back a little bit? And you see it doesn't have many lines on it, right? And this is what I was talking about in the very beginning of the, the video. So it just has like a couple lines on it. Your dependents, your name, address, sign, and date. So anything that you put into your system or anything like that, you're literally, it's going to go onto a schedule. Now the second page of the tax credit, the 1040 is not a 1040A anymore or EZ or any of that stuff. It's just straight 1040s. They wind up having, like the standard wage, salary. You do put all that in, but it's very limited because everything's going to go over to the schedule. So that's something also, to take into account. And this is really for people who literally do their taxes themselves. If you do your taxes yourself, just make sure you pay attention to what you're putting in. That's a very important part, because you don't want to be in a situation where you have to get your taxes either audited because something's not right, or you don't want to be in a situation where you are like not putting in information that actually could go in to kind of help you. So that's something also that is on there. Okay. So let's see. I'm gonna go to my other form that I kind of did up for you guys or whatever. Earned income credit. So earned income credit is for people who work but do not have high incomes. And so with that being said, that some people will have the opportunity to get earned income credit and some people won't have the opportunity to get earned income credit. But it all depends on your income and determines whether you're going to be able to get earned income credit at that moment. The other thing is that, let's see, we talked about the affordable health care. We talked about, let's see, the adjustments. All right. I think that may be it for me in terms of like things that I'm going over. This is just the beginning part of it. I have a lot more. Next Thursday, I'm going to come on and do small business and maybe even cover some of the other tax stuff as well. I'm just thinking of some other things that I am actually, that I did not go over, but I think I went over a lot of things. Again, I definitely try to post as often as I possibly can, for you guys who actually, do your own taxes, to know about different things that have changed for the 2018 tax year. I think that it's very important. that everybody knows, so that you're well informed and not like in a blind. And then sometimes when you read things, it's just not, as clear as maybe what someone can maybe, explain to you. So that's one of the things also that I also want to mention as well. Here's another thing I wanted to also mention. We talked about the itemized deduction. So the mortgage interest is capped at $750, and it used to be up to $1 million. So so if you had $1 million worth of mortgage insurance, right, or mortgage interest rather, you were able to claim, but now you're not. So that's something also that has gone down into that. It only applies for improvement debts or anything like that. I think is when it goes up a little bit further. I think at this moment I have finished. My intentions were not to be on here long, just to come in and just give you guys a simple beginning start on tax season 2018, really, because there was so many changes that had been done. And a lot of people are confused. A lot of people want to know, what is my taxes are going to look like? Really, you don't know whether it's going to be a harm to you or whether it's not. The main focus is to make sure you always keep your deductions at a rate and your exemptions at a number that's not going to hurt you come tax season. A lot of people will get their money the entire year, and then come the next tax season, you may owe because your exemptions are so high. Well, at that point, it's kind of, you really can't do anything. You really can't fix anything because of the issue that's kind of going on with, you actually having your exemptions up too high. You can't, change anything. So, that's one thing also, to think about, in terms of that. Again, I just want to go over, I am always here just to, answer any questions, whether you DM me, whether you email me. My email address is majors@smajorsco.com. I'm willing to answer any questions pertaining to small businesses, as well as individual, married, any of those things, single taxes. I'm, also, willing to do that as well. The other thing too is I also do accounting services, and that's also on my website. You can check that out if you know anybody, or if you need some type of assistance. Another option in terms of accounting services is QuickBooks. So QuickBooks is actually a good option if you are a person who wants to track your expenses, but I really recommend QuickBooks always for someone who actually need that when they're actually going through a situation of a business. And when they're actually going through a business, you need to kind of separate your tax, your personal monies from your business monies. And so with that being said, it's, you kind of want to make sure that you use a software like QuickBooks or something like that. And there's some other ones that'll actually separate those expenses out. And it's good for a person too, if they are wanting to just kind of, maintain how they're spending their money and seeing what things, kind of, they spend throughout the week or the month. You attach your bank account to the QuickBooks, and, it'll automatically go right into the QuickBooks app. I also have a link to QuickBooks if you're interested, and that is on my link tree. So it's LINK, it's LINK, I think, .tre/SMajorsCo, and it'll have the link in there actually that'll give you information in regards to linking into QuickBooks, and I have other information